a renter's property. It will cover rowboats and canoes for DP 2 and 3, but not under a DP 1. And it also covers student property at the dormitory. What's not going to be covered, it is going to be any money, securities bills, accounts, banknotes, deeds, passports, manuscripts, evidences of debt, animals, birds, fish, pets, aircraft, watercraft, and automobiles, any property of tenants or grave markers or mausoleums. Coverage D. So if you have a loss under coverages A, B, or C, you could be eligible for coverage D, which is going to be fair rental value. If you are renting out the property and you have a covered peril under A, B, or C, this will make up for the loss of rental income, right? So it's only covered with the coverage A, D, or C loss. And because you have a deductible on that, you have no deductible that you have to suffer secondly for this coverage D to kick in. Right, so the loss of rental income is going to only be available until the repairs are gone and only in the shortest time possible. The policy expiration does not stop any of these payments. It is typical for, say, if your house burned down that you were renting out, for you to continue to that policy only to the extent of when the property is livable. So they would go ahead and let the policy expire out or cancel out. And then they would go ahead and continue on the fair rental value payments until that time when the repairs are done, and then generally a new policy would be put in place. Coverage E, this is for the opposite situation. You would generally have an indirect loss in a situation for additional living expense if you were living in the place and not renting it out. So if you had to go find an alternative place to live because of the damages there, again, only going to be covered if the damage that coverages A, D, or C are in place as direct losses. But because the deductible fit, there's no deductible paid on coverage E. This only pays for the necessary increases in normal expenses that you would have to incur. So like say you had to go to a hotel room, you had to use coin laundry, you had to eat out because there was no reason or way to cook at the place that you're temporarily staying. It's going to cover those additional increased expenses until repairs are complete and only in the shortest time possible. But it will not cover the normal costs that are going to be there in place anyways, like the mortgage and